Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, June 29th, just before 5 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend. Check the trend gauge over here, flashing bullish for market leadership, and the five major indexes that we track across all three time frames. That's the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. All five are above their respective moving averages, so we've got the green arrows showing there also. Still have the stop sign with the NASDAQ 100 being 7% extended from the 50-day moving average. That's a historical that's compared to historical ranges. Bit of good news on, uh, we had talked about, is it going to correct through price over time? I'm going to show you a uh, couple of spots on the chart that I think are positive news as far as the settling down of the NASDAQ 100 big seven names go. So what just happened today? Uh, when I woke up, the futures were up nicely, about 0.3 to 0.4%. 8:30, some economic data came in. In both cases, stronger than expected, and we sold off to where we actually opened red, but put in the lows. We went sideways for about uh, chopped around for about the first hour, and then started working our way higher, led by mid and small caps. NASDAQ 100 resting, and S&P 500 showing sector rotation out of tech and into uh, non-growth, non-tech sectors. That's strengthening the overall market. It's increasing. The breadth is expanding, and of course, with small and mid caps participating, breadth has to expand just because the count of them is so vast. So all in all, pretty good day despite the rest on the NASDAQ, but as I said, we're taking that as a good sign. So here are the numbers on the day. RG8, this is our 8 growth ETF composite, up 0.67%. The value half of most of the indexes outperformed the growth half today, but again, growth has been leading so much. Rotation into some of the other sectors that were lagging is good news, because uh, it's tired by now to hear people say, well, it's just 7 stocks that are holding up the market. That's really just not the case. S&P 500, uh, slight negative open, closed near the high of the day, up 0.45%. NASDAQ 100, weak all day, closed down 0.20. Dow outperforming the other two big cap indexes, up 0.80%. Mid caps up 1.2. Same with Russell 2000 small caps. Led by banks and oils. Bank stress test yesterday. Banks of all sizes outperformed today. Both KRE and KBE were up between 1.8 and 1.9% on the day. Global 60/40 down 0.11 with that strong economic data. Interest rates spiked, so bond prices dropped across the board pretty severely, and higher for longer seems to be the motto on Wall Street now. Like, at least looking at the Fed fund futures, they're pricing in 2 more hikes by the end of the year. So global 60/40 negative by 0.11%. In-house GROTECTION, our biggest holding today, which is no longer our biggest holding, was Uber, and Uber got a piece of bad news from the California Supreme Court. So there was uh, the state of California has been battling Lyft and Uber and, frankly, all of the gig workers for whether or not they're employees or contractors. They had an election about this. It went to the ballot, and the voters overwhelmingly said that they are not employees, there's contractors. But somebody challenged that in court, and the Supreme Court, the California Supreme Court, decided to take on the case. So from what I've read, there's less than a 50-50 chance that they believe that the will of the voters shall not stand, and that they're going to reinstate, because it was in the first place, it was the state that said that they're employees, which is just outrageous and ridiculous. But so are the leaders in California. Uh, and that hit Uber today. We took off half of our position, locked in 10% gains on half of it. 10% gains that were 15% gains at one point, but still holding on to a piece of it versus the 21-day moving average, which is, there's a lot of support right there. So maybe it's just a 1-day overreaction, but there was absolutely no bid on Uber all day long. We had to piece out our buy to not impact, or our sell to not impact the market too much, although it's a very thick stock, but um, thickly traded, I should say, but we still had to break it up. But bottom line, GROTECTION underperformed today, and the blame goes to Uber. Uber took a bunch of the credit while we were outperforming, so uh, you never know which direction the market is going to take. That's why it's a market, and we're prepped for all situations, but slightly up on the day anyway, up 0.06%. So let's get to the charts right now. And we're going to start with the S&P 500. So the 5 out of 6 day sell-off stopped with Tuesday's nice gain. Yesterday, Wednesday, a consolidation day. Today, further to the upside with rotation. That's a positive. The downtrending stochastic has paused and has crossed back up through the moving average. That's a plus for the S&P 500. In fact, you're going to see 4 of the 5 indexes where it's poking above. Which one is it not poking above? That's right, the long leading NASDAQ 100. Also 5 out of 6 down days, up on Tuesday, mild gains on Wednesday, tight pause today, underperforming. So, I mean, the stochastic and the moving average are right there together, but it is the one of the 5 indexes, the 5 major indexes, that has not had the stochastic cross. And if you look very carefully, you can see, so look at the top of relative strength here. That coincides to where we were here. Then look at relative strength here. It's barely above relative to where we were going on the S&P during this time period, which is fine. But now coming down, making lower highs, relative strength is also making lower highs, which means it's ever so slightly underperforming versus the S&P 500. But again, this is a good sign. We don't have a problem with it when we know that with the Nasdaq 100 being as extended as it was, that it needs to revert to the mean. We would certainly like it to revert to the mean over time and not have violent price corrections, and that's kind of what it's doing, and that's a good thing. Let's quickly go to the equal weighted Nasdaq 100, and that bounced at the 21 EMA. We didn't get to the 21 EMA on the Nasdaq 100. So that we got close, but not quite there. That corresponded with the underperformance on by mid caps and small caps. When they underperform, the QQEW normally underperforms the big cap index, but uh, lower highs also on the relative strength here. That really doesn't matter that much. But you do see how this did not have the hook back down. That's the equal weighted NASDAQ 100. And again, that's because mid caps and small caps outperforming the market cap weighted index. Let's go to the Dow. Dow with some relative strength today, bounced off the 21 the last 2 days, back above 34,000 plus for the Dow. Let's go to mid caps. Here's where the real strength was today, and it was, as I said, led by banks and oils. Up to the top, near this top of this cup and handle, 476.20. Nice pattern. Sold off slightly while it pulled back with the rest of the index is now relative strength this week. That's what we want to see. We need to see breadth, and when you have mid caps and small caps participating, that's what you get. Here's the small caps, not quite as far up to the top of the handle, but looking good nonetheless. And again, the stochastic crossover there that we have on 4 of the 5 major indexes is a plus. Let's go to the VIX. VIX up along with the index today, just slightly though, closed near the bottom of its range, still trending below the declining 21-day moving average. That's a positive. Let's go to the dollar. Dollar strong today with the rising interest rates back above the 200-day moving average, getting closer to the top of its range. With the dollar being strong, how did precious metals fare? Well, silver was down, but undercut and reclaimed the 200-day moving average. Still down on the day, but not by much. Gold, all three of these were down early with the gap up in the dollar. Gold undercut and reclaim, putting in a hammer. Looks like it's trying to put in a bottom. And look how terrible the relative strength has been. This can't underperform forever, can it? No, it doesn't. We always see reversion to the mean in all asset classes. So undercut and reclaiming the bottom of that range, very oversold on the stochastic. So let's see if gold can get something going here. Gold stocks also gapped down, made a lower low, but closed positive. So very nice comeback by gold stocks. Stochastic cross, although still in oversold territory, but again, looks like it's trying to put in a low here. That's something we'll be keeping an eye on because again, the relative strength has been absolutely abysmal in gold stocks, and it doesn't continue forever. You wait for a sign. You don't guess when it's stopping to go down. We're waiting for a sign. For now, that could be as simple as a move above the 80 MA, which has been acting as resistance over the past 2 weeks, or even better, a move back above the 21 EMA, which acted as resistance 3 and 4 weeks ago before it got even weaker. So uh, keep an eye on those gold stocks and gold, see if they can bottom. How'd Bitcoin do today? Was consolidating the big up move. Tight range day, still up 2%. Nice how tight that's getting. Coiling for a break one way or the other. The Bitcoin related names are acting very well. Also, I'm talking about Riot, Mara, Coinbase, and MSTR. Let's take a look at those. We don't normally show those, but quickly, Riot showing some strength, up 1% today. These will get better as we go along. Here's Mara, much better chart, breaking out after consolidating near the high of the flat base. Uh, Coin up 2.4%. Again, broke above all the moving averages and a lot of volume and blue bars there. And finally, MSTR. This is the MicroStrategy, the database software company that owns a bunch of Bitcoin on its balance sheet, and it kind of trades in sync with Bitcoin, up 4.5% on the day. All right, I got sidetracked there, but I did want to show those. So let's move on to bonds now. Bonds got hit. After that economic data came out, you can see the gap down there, the clear break of the trend line and the failure at the declining 50-day moving average and the harsh hook down on the stochastic. So what we want to watch now for is these prior to lows on this big bond index, broad bond index 72.20, 72.07. See how we act around there. Let's go to TLT, the 30-year, also a gap down. This one closed at the lows, broke the trend line. So a big failure at all that moving average confluence. We were looking for a possible breakout on that. Instead, we got a breakdown, moving average hooking down from overbought also. And if the rates are, if I'm sorry, the prices are down, that means that the rates are up. Here's the TYX, the 30-year, up 2.89%, breaking the downtrend line, looking just the complete opposite of the TLT rates, hooking up from oversold. And then the 10-year TNX up 3.9%, up near the top of its range, showing some pretty bullish action. It didn't get oversold. So that's all the interasset correlation that we do. That means it's time for the tail of the tape. You can pause this. I'm going to hit a couple of highlights. AAII percentage is updated, down one percentage point on the bulls, flat on the bears, up 1 percentage point on neutral. So a little bit of extreme here to the upside from a historical basis. So, but it did cool off after the market cooled off over the last week and a half before reasserting itself over the last couple of days. So the news that came in before the open, Q1 GDP final was expected to be 1.3%, actually came in at 2%, uh, much higher than expected. And then weekly jobless claims, both continuing and new, were below expectations. So uh, Jerome Powell wants to see jobless claims increasing. He didn't get it. The reaction was a raise in interest rates, implying higher for longer. But the market, which went from 0.4% up before the news came out to a negative open, ended up closing above 0.4% on the S&P by the end of the day. So the market took it in stride, although the rotation benefited the value sectors. So day count from up one with a consolidation to up two of the last three on the S&P. That's a 19-day rally since the breakout. Third day above the 80 EMA, 24th day above the 21 EMA. Expectations positive, still noting we are 7% above the 50-day moving average, but that RS fading is a positive sign. It means we're correcting through time, not as much through price as it is a subtle signal. Here's the action on the day. You can see the sectors. It was defensive sectors that outperformed. XLC and XLY positive by the close. So it's really just XLC, which is communications, because Google was down and Meta was down. Also, biotech week and builders week with the uptick in interest rates. GDX went from negative to positive, as I mentioned. Retail, oils, banks, and the dollar strong. So what do we do in house? Well, let's take a look at Uber. I talked about that. State of California, Supreme Court taking that case. Volume not that high, 9% above average, but it is overbought. The stochastic hooked down, and it did break the ADMA, which it had been tracking against. This is when we've got a full position on, we want to see it staying above the ADMA. If it pulls below on below average volume, we're okay with it. If it pulls below on heavy volume and there's news, we're not so okay with it. So really the question now is the breakout for was this 42-ish area. The 21 EMA is coming up into that. The price is coming down into that. And what's going to happen when we get there? Is there going to be more selling, or is it going to just bounce and continue higher, or do we have to wait for the Supreme Court to weigh in? I really don't know. We go by price and volume. If it breaks to 21, we'll be selling some more. But for now, we cut our position by half with the break of the ADMA, locked in the profits. We still have around 20% gains from the initial two buys that we did on Uber. That was the only portfolio change that trimmed our exposure uh, from an RVAB, Revere volatility adjusted beta from 2.3 to 2.17. Bottom line for the day, mid and small caps lead. S&P 500 is up with sector rotation. NASDAQ 100 rests, and there's nothing wrong with that. Let's take a look at a couple of stocks. Yesterday, I mentioned industrials and transports acting well. That's part of the rotation. We got more of that today. But one industrial stock that I want to show that's having a renaissance is Generac. This is a former leader, and it was a big leader, had a great run up here in 20 through 21. Then it topped and had just a brutal sell off from 500 down to 100, losing 80% of its value. Now coming back here along with the industry group in the sector. Look at the volume bars over the last 2 weeks. It's really extended from its moving averages, but it's at the top of this cup that it's forming. I would really like to get a little gentle handle put in here. Um, I read some stuff about rolling blackouts in California possibly having to happen again. uh, that means more generators. And look at the sales. So earnings peaked in 2021, decreased the last 2 years, but they're ticking back up. Next year, 33% sales with a 21 PE. That's a PEG ratio below 1. That makes it nobody can say this stock is expensive. We know how it ran before. It's possible it could run again. It's back on our radar. After showing up on some scans, we need a handle right here after this cup. A couple of other ones. Extreme Networks is acting extremely well. Now, this is odd. Back on 419, they warned and big gap down 12.4%, really heavy volume, 419%. But that put in the low. Sometimes everybody that needs to get out gets out on that day. And that's what we saw. This also impacted ANET and some other networking stocks that day, but it just worked its way back higher. And this has been the leading network stock over the past month. It's got earnings still over a month off, acting fantastic. We just missed this. It had this nice pullback into the 21. We were watching some other stocks, didn't see this. Beautiful. Look at these volume patterns accumulating since the breakout. Two more over the past day, lighter volume on the pullback. Uh, One of the reasons it wasn't showing up on our scans was because it was under the $50 million threshold that we prefer. We usually scan, but we pay more attention to once they get back over 50 million. And with this price change, price increase, it has gotten back over there. Nice earnings next year, 91% versus a 27 PE. Again, there's the PEG ratio. You can't say it's expensive. Wish we'd have got into this. You can't kiss all the babies. We know that. We've been very exposed to the market and outperforming it over the last month, but uh, certainly want to talk about some things that are showing on our screen, and one that's been in the 2121, but we don't own, poked its head above the 21 a couple of times, but always reclaimed by the end of the day is DraftKings, up 2.4%. This 2660-ish area has been resistance. That's where it rejected today. Uh, it's on the 2120 list, so we're absolutely watching it. But it trades in a very choppy manner, usually one step up and three little steps back. But a breakout with strength would change the character of that. Let's take a look at a couple of more in the portfolio today. MDB, which we bought yesterday. MDB, which we bought yesterday. Uh, Tight action around that 400 level, acting well. Other stock that we added yesterday was SMCI. Gapped up in the morning, turned red, closed flat on the day. This is a very volatile stock, but the stochastic is crossing up from oversold, so it is a good risk reward, or it was yesterday when we bought it. We do still have gains in this from yesterday. Let's see what else. Tesla and chat. Tesla and Nvidia are now two biggest holdings. Tesla trading tight above the ADMA. They're supposed to announce their units sold for the month over the weekend. We'll be watching that. And Nvidia with a triple inside day. That means 3 days ago was inside 4 days ago, 2 days ago inside three, yesterday inside the prior, and today inside yesterday. Triple inside day. Tight action, but one thing I don't like, it can't get back above the declining ADMA. So while the consolidation is nice, we would prefer to see strength. This has been showing relative weakness actually over the past 6 or 7 sessions, but obviously it's a leader. They don't go up every day, but watching for a move with this triple inside day on NVIDIA, and that's going to wrap it. As always, like to hear from you. My email is don@revereasset.com. You can reach out to me or my partner, Dan Stewart, if you're interested in becoming a client. Dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We preserved capital last year during the bear market. Now we're taking advantage of the bull market with that dry powder that we kept on under the tarp during 2022. And growth stacks rewarding us over the past month, certainly. And with that, I'll wrap up today's video for Thursday, June 29th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.